Good evening. This is the Eliott Wave update for the NASDAQ 100 for Sunday, May 15th, 2022. The NASDAQ gapped higher a little bit, not by a great deal, but it is up about 31 off of where it finished up on Friday afternoon. Now, what does this mean and what's changed and what hasn't? And let me just start by saying that on this longer term view, which is right now, I take it off of the daily chart, nothing has changed. We remain in the same pattern, but the pattern has now made itself clear because we had an additional 5 days of trading and charting to balance out what is going on a daily and hourly and on down picture. So I continue to count the largest sequences as 5 waves down and corrections being 3 waves. So the trend remains down. The count on a larger term or time frame remains down. And so I'm going to just quickly make a quick update here and hopefully set us up for at least the next couple of days and see what we come up with. Now, what the market is basically doing is continuing to do, put in the moves for an intermediate third wave decline. The intermediate third wave will consist of 5 waves of minor degree. There's minor wave 1, minor wave 2. Now I'm going to go down because this is where the change happened. And last week, I included both an alternate view and the preferred view and was interchanging them and tracking them together, but showing the differences on the chart. And so now that the week has closed out and we got the rally, and it's intending to be a little bit of a stronger rally, it does put a greater emphasis on that the decline from 13,555 down to the low on the 12th at 11,689 was indeed 5 waves down. And that then I need to take a step back and put a determination. Was that the minor third? And I walked away with that feeling of no, it wasn't. So I recounted and went back to what has always been the preferred, but I'm interchanging it to show on a chart. So I went back to it, labeled it back up. So the minor 1 is again at the April 26th low at 12,801. And then we had minor wave 2 complete on the 4th of May, and that would have been at 13,555. So now we have minute wave 1. So I'm going to scoot down to the 1 hour chart. And we had a clean 5. Crazy moves in terms of the bursts higher. So what would have been a corrective phase just blew out of an area with a great deal of push. And this one in particular came right back and took it all right back. And then the market just rallied anyway. So interesting week, a very lucrative and successful week. And I use the lucrative not in terms of money, which it was a good trading week, so it was profitable, but lucrative in terms of following your rules, adhering to your rules and how you've set them up, and having that success. So whether you made a killing or not, if you honored your rules in terms of that the market when it did something you weren't expected and you got taken out via a stop, and maybe you reached your level on a daily basis and you stopped, that's still a lucrative day because you followed your rules. So I'm going to leave it at that. That's just kind of that side lesson. It's because it's like, it gets to a point where we have to start turning things around. And if it's following your rules, which you know work, and one of those rules is every trade really has to have an exit level. If it's not working, if the trade becomes invalidated, that you're just out and you're on to the next trade. So that's what that was all about. So yes, it was a lucrative week as well. And now what we're going to be counting out is, again, back out to the daily just real quick, we continue to work on the subdivisions, the extension of the intermediate third wave. We've been looking for it. Is it going to extend just to once and then the twice? So that's why this kind of shifts up and down a little bit, because we may need to have to include greater depth in terms of the third waves, but it's not looking that way. They're all coming in pretty clean. And so here we are again with a 1 and a 2, and then finishing that minute 1. So we pulled up the degrees again, and the minor wave 1 and 2, and then inside of the minor 3. So we're back inside that minor third yet again, and finished minute wave 1. And so we're within minute wave 2. Initially, right out of the bat, that we look at the fib retracements, and that would be for the length of the minute wave 1. So we can put some parameters around what we can expect in a minute wave 2, at least on a Fibonacci basis. And that would be that we come between the 50 and the 618. So the Fibonacci 50% level and the Fibonacci 61.8 or 62% level and that would be the retracement. So at this level right now, we're basically hovering around the 38.2% retracement level, that the bounce has now gone back 38.2% of the decline. And then here it would be 50. And then the most common is between the 50 and the 618. And if we have an A, we need a B and we need a C. Now we may have the A and the B and we're in the C, which is going to put us up closer to 12,622 to 12,842. That's the zone. But that would be a completion zone, not a breakout zone. And above all that, or just above that top line there, we have the daily 20 at 12,901. And that should also provide some pretty stiff resistance if it continues to push. I am actually not looking for a move back above 13,000. I think that we have been building towards this point and going, and they keep bouncing back in like, oh no, this is the one, this is the one. And so we're going to give it one last hurrah as they now pull up and start breaking towards 13,000, but fail yet again. And like lambs led to the slaughter, I suppose, but the market should turn. And again, it would be in a third wave. So that's what we continue to trace out. But I don't have a magic crystal ball, so I have to continue to rely on the market to tell me and track the wave pattern, track the movement, and then fill in my blanks as we go along. But remember that this is a work in progress. In other words, it's like this correction is going to be unfolding over the next several years. So it's going to constantly be molding and shaping and telling us, but it's not me, it's the market. All I do is interpret it to kind of give some ideas on where do we go from here? What can the limitations to the upside be? Where can we start to look for a break if it's not going to make those levels? So that's what we work on here. And that's what I'm going to continue to do right now. So we're in a corrective bounce. That bounce will be a minute second wave. Second waves on a Fibonacci basis most often retrace between 50 and 62% of the length of this first wave. And so that's the one we're looking at right now. This is the move. So the Fibonacci retracements reflect that move, nothing bigger. So we're not looking for something bigger right now. If we start to break, that makes me take another step back and see what else becomes available. But I'm, again, on a daily level, we have resistance, which should be strong at 12,900. We have resistance that should be strong at 13,570. So there's areas that the market, if it wants to go up and try and test, should really take pause about why they're pushing to a higher level. And I think that's eventually what does sit in. Yes, we're kind of been oversold. Yes, it all points in one direction. Sure, okay, let's all jump and we're going to run because there'll be things to do and things to trade. And one hand washes the other and we all make money. So here we are. That's what I'd be looking for. Back down on the hourly. It needs to take that ABC approach. And again, we could possibly have it A, B, and we're in the C wave. And again, if that's the case, we're heading up to that high. On the hourly, we're bumping against the hourly 200. That's at 12,485, 486, 501. Yeah, 12,000. So we have resistance at 12,500 and we're within 15 points of it. So, and suddenly we've just jumped and now we're up, 100. And so it's quite a move. Everybody's kind of moving in and they're covering, they're making their adjustments to how they came out of expiration. And that in and of itself just kind of pointed to a lot of different directions. Nonetheless, if indeed this is A to B and we're coming down and we're in that C wave, it's a butte, it's a 1, a 2, a 3, a 4, we're in the fifth could go. We still got Asian markets to deal with. Then we got the European markets to deal with. Now that could go two ways. It could propel it even higher or could turn it lower. So basically we go on the premise of what the wave pattern looks like, and I'll just zip down to the 30-minute and we can take a peek real quick. Again, this will change. If we're going A and B, then this is a 1, 2, 3, 4, 1, 2, and then it's starting to get a little bit loftier up here. And it could mean a couple of things, but doesn't look like it's at an end point versus, endpoints kind of just work their way up and they get, and then they come back down. But if this continues to drop, which it didn't do, and now it's pushing higher, if it was to continue to drop on the 30-minute, it has to come down, break below at the 20, the 200, and the 50. If the 50 moves above the 200 on a 30-minute basis, that's going to present us with a little bit more of a bullish of a picture and support a move to 12,622 up to 12,842. Things can burst. You run out of sellers because they're all going to like, okay, we're done. We're just going to let you have your folly. We'll be back in a minute. And then the market flies. Point is, we're not going to be caring why. You really can't. We're just here to trade, and we're going to just trade the number and the price action. Price action will tell us that's where we're going. We can wrap parameters around it. If the market is going to turn and break down on the 30-minute chart, it needs to break back below the 200 and then the 50 and get them all starting to head lower, turn lower. And that would be on that 30-minute chart. On the hourly chart, same deal. We're bonking the head. The third hourly chart's bonking its head up against that hourly 200. And so I'd be looking for that to hold right now, but understand that if it breaks and it can push far enough, it's going to continue to bring in additional buyers. The fact that it broke, that is part of like working with moving averages. If it breaks and clears it, so it can break, come back, hold it, and then start, and that's really your entry. It's not, so you don't want a false breakout, and that can happen often as well with the larger, moving averages, the 200, the 50. You get up, you break above it, comes back down, and continues the decline. So it becomes more of a trap. So it trapped a lot of buyers up there, and they just turned in, they just started to kill it after that. So that both of those scenarios are alive. That's why you don't necessarily just buy the break on this case, because it would be breaking higher. So for tomorrow, we leave open the possibility that this ABC for wave 2 continues. It's a minute wave 2, and then next step would be a minute wave 3. What can minute wave 3 look like? Well, obviously 5 waves down, but let me go out to the daily. I will just throw them on so that we can take a look. I'll get rid of that one. And now I'm going to put on the Fibonacci extensions. And for the minor third, okay, because we're not sure where this wave 2 is going to end. So now we'll just go for the minor third, which we know is in order. And it's going to go up to here. Come on. Boy, it just wants to bounce around. All right, I can fix it. Edit. 13, 555. There, okay. So what we're looking at for a minor third again is breaking below 10,000. So again, what this really does present us with, the depth, it just tells us more is that it's still in alignment that we could walk in one day and have more of a crash-like scenario. This rally, it truly is not taking any of that away except the oversoldness of the market, which just can bring about more selling. Oh, we're not oversold enough. Okay, so they can sell it now. We're buying it because it is oversold. That changes the whole scenario. And then add to it that we got options, everything else that's trading and all kinds of things are moving around and we get the moves. So it's beautiful. And an upside move, sure, why not? So again, eventually when it gets up here, 382, when it gets up in there, then we are looking for a turn and we're looking for it to come down. And it would have to start to break. Now, what would be on the cards then for the larger minor three, even the minute three will have power, is it's going to break below 11,084. We've already been sub 12,000 once, got down to 11,689. That'll be taken out. We'll break below 11,000. So this could be a nasty, quick move. And it's nothing more than a continuation of what we just did. Just a little bit bigger. So I think we get ourselves down into here. Don't forget, we're working on this larger intermediate third. And that has always kind of had its eyes wrapped around 9,000-ish. So we can get the minor third done, a minor 4 and a minor 5, and then we're going to have that intermediate 3. So those levels remain valid. And I can pull it out and I can show you, but it's 9,057. That's what that number is. And that would be a possible bottom for just the intermediate third wave. Then we have an intermediate fourth wave and a fifth wave. Right? That's the preferred view. The alternate view suggests that this is an intermediate A, B, and we got a C for that primary A wave. And if that's the case, then what we're working through is still a third wave down, but it's a minor 3 of intermediate C. I'm counting it as 3 because I do expect 5, and that 5 then to get us down to that March of 2020 low. That's kind of where I'm looking for the primary wave A to be put in down there. Anything larger than an A wave on a primary degree, if it comes in at primary wave 1, they're really, yeah. Don't want to talk about that right now because it's pretty severe. That's why I'm going to call it a wave A. Wave A is 5 down, and we're getting a nice 3-wave rally. And I mean a nice, bankable, tradable, a little bit more sustainable B wave rally. And that would be an ABC up. So I'm going to leave it all right there. Tomorrow, though, look for upside. Look for the upside. Don't fall in love with it. Just trade the price action. Trade on your very near term, your small term time frames. Those moving averages are all going to have the same functionality. They're just doing it on a much lower time frame. So things move around a lot bigger, a lot quicker, I should say. Use them. That's what they're there for. That's why we're learning about them, because they continue to function all the way down, as does the Eliott, as does the Fibonacci. All are usable on a 30-second, 1 minute, 2 minute, 5 minute, 10 minute, 20. All of the charts down below. No matter how low you go, you use the same moving averages. All of the settings are the same for your moving averages. Fibonacci's comes in the same. Measuring 5 waves, looking for 3 is the same. So have a great trading day tomorrow. Our next update will be on Monday, May the 16th.